In today's video, I am going to show you a very good strategy known as the Ichimoku Cloud Trading Strategy. Upon looking at your screen right now, you may think this is a complex strategy because you may not understand anything, but I can assure you that this is the simplest strategy that you can use as a beginner in Forex trading. If you are coming new into Forex, you are a beginner in Forex, it may be difficult for you some concepts. But if you understand this strategy, you will be profitable within the shortest time possible, even if it will take you just 3 weeks. Yes, and I mean it. And I will explain that in this video. So just stick with me as I walk you through the Ichimoku Cloud Trading Strategy. So there are certain things that I will want you to take note of it, and I mean it. Get a pen and a paper and write down these 5 points that I want to outline for you if you are going to be trading the Ichimoku Cloud Trading Strategy. So we have these red points that you are seeing, these red parts that are segmented. They are red in color and green in color. Any colored part that you are seeing, colored segment, is known as a cloud. A cloud. That is the reason why there is cloud in nomenclature of the strategy. So the Ichimoku Cloud Strategy got its name from just these segments that you are seeing. The red part is a cloud. The green part, it is also a cloud. And their colors are very important, very, very important for you. So take note of them. Now, the green line that you are seeing is lagging behind. So it is known as the lagging indicator. It is very, very important as well. I know why I am naming all of these things for you to take note of them. Now, this red one that you are seeing, you are using it in reference to the blue line. Whenever you see the blue line is above the red line, is telling you there is an intention to buy. I said an intention. I didn't say you must buy. There is an intention for you to buy. If you see this blue line below the red line, there is an intention for you to sell. That is the use of the baseline. So it is just like a base, a standard. So if you have known all the parts that are necessary in the Ichimoku Cloud Strategy, we are going to go ahead now to show you how you can start trading it. Okay, so how can you start trading it? For you to trade the Ichimoku Cloud Strategy, you need all of these 4 things that I have mentioned. Therefore, this line, the blue line, the red, the cloud, and the green line, they must all align. And I'm going to give you the criteria that will make you to take an entry and when to exit. Anytime that we see this blue line is above the red line, it is the first criteria. We have one that we intend to buy. So you want to buy whenever you see the blue line is above the red line. But if the blue line is below the red line, we want to sell. So take note of this. This is the first point I want you to start writing. The second thing, again, is that this lagging, if you are buying, you must make sure that your lagging indicator must also be above the price. So this is our candle. We can see the candles are here. These are the candles. So you must make sure that this lagging indicator that is in green must be above the price. And also it must be above the cloud. So wherever it is, this is the cloud right now, and this is the cloud as well. We can see that the green line, the lagging indicator, is above this cloud and at the same time above the price. So we now take note of the second point. Now the third that you must note again is that your price must break with a full body above the cloud for you to go in. Now, if we are buying, we want to see a candle such as this. This is our candle to go above the cloud. So if I enlarge it for you to see what is happening, you can see that this candle now is breaking with a body, not a wick. The body must be above the cloud, and it should be a bullish candle, not a bearish candle. So since we intend buying, it must be a bullish candle. You must make sure that when this thing occurs, that the cloud ahead of you should be also green in color. Let's say at the time that this candle was forming, all of these have not been formed, but the cloud must have been formed. So the cloud ahead of this candle that is bullish, that closed above the cloud, we expect that the cloud after that candle should be green. If the cloud is red, we are not going to take the setup. We will only take the entry when all of these conditions are met. Haven't explained all of these things, I am going to use the bar replay button to show you guys how to do it. Now, this is USD I am on the 15-minute time frame. Now, what are the conditions that you need in order to exit a trade if you are in a trade using the Ichimoku Trading Strategy? So if you are in a buy, you exit immediately when the lagging indicator crosses to the opposite side. You exit your trade at that moment. So if the lagging indicator closes below the price, I exit, or it closes below the cloud, I exit, whichever one comes first. So I will go over now to show you the bar replay function. So I'm going to show you a bar replay example of how you can apply the Ichimoku trading strategy. So let's go on. So we have our candle here. This candle now, it broke above our cloud. The blue line is above the red line, and we have the lagging indicator is above the clouds and is also above our price. And at this point, we are having a greenish, which is bullish cloud ahead of us. So it's telling us the cloud is greenish ahead, which means we are good to buy. So at the close of this candle that closes with a body above the cloud, we will take our entry. Our stop loss will just be below the cloud that corresponds with this candle, and you will aim for 1 to 2, and let's see how it goes. Now, one thing with this strategy, like I told you, is you will exit when this is bullish. So you exit when the lagging indicator crosses below the cloud, or it crosses below the candles. Whichever one comes first, you will exit your trade. So whenever you are in a trade, be watching out for your lagging indicator. Immediately it crosses, I didn't say it's approaching, it can approach the price, it may not cross, it will go up again. But if it crosses that price to go below it for a bullish, or it crosses below the clouds, then you have to exit your trade. So let's play out and see how it will go. So we hit our TP and price continued to go up. So for the bearish example, we will play out. So for now, we have not seen our lagging indicator, which is the green, below our cloud and below our price. So we can't take any entry. And even though we are seeing the cloud over here is bearish, the blue line is below the red line, we are waiting for our lagging indicator to, as the last of the factors, to align with the rest before we take a shot. So you can see that this candle now, this bearish candle, is what pushed the lagging indicator to go below the cloud and the price. And we have a bearish cloud. The blue conversion line is below our red baseline. So we are going to short the market. We will short it, and our stop loss will just be above, the corresponding cloud level above the candle, and we will aim for 1 to 2 risk to reward ratio. So let us play it and see how it will go. and we can see we are able to hit our TP. Then price started reversing, and the lagging indicator began retracing and crossing the price, which if you were looking for more, you would have exited because there's a signal for you already to exit the trade. If you have any question regarding the use of the Ichimoku trading strategy, you let me know in the comment section.